Hi dear traders, and welcome to the Fierce Trading Academy. What is the Relative Strength Index, RSI, and how to use it effectively in our trade? The Relative Strength Index, RSI, is a momentum indicator used in technical analysis that measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of a stock or other asset. The RSI is displayed as an oscillator, a line graph that moves between two extremes, and can have a reading from 0 to 100. There are two key levels for the RSI, 30 and 70. When RSI goes above 70, it means the security is in overbought territory, and when RSI goes below 30, it means the security is in oversold territory. So here is Tesla's daily chart. RSI indicator has a value ranging from 0 to 100. Which value over 70 technically places the security in overbought territory, and value under 30 places the security in oversold territory. Please pay attention to the highlighted area. The orange circle is when RSI passed the 70 and then crossed below 70 and then crossed above 70 again with no strong direction. In this scenario, RSI can help us to spot that buying pressure is decreasing or at least has been stabilized and selling pressure is kicking in, which can possibly be led to the trend reversal. In this situation, we might sell the security to secure the profit or start a short position. Now pay attention to the green circle on the bottom where RSI crossed below the 30 and hovered around the 30 areas for a period of time. With help of RSI, we can see the selling pressure is decreasing and buying pressure is increasing. So here in the green circle we should open a long position with proper risk management or close our short position. In this video, I am not going to show you how RSI is calculated, because what is important here is to understand RSI concept and learn how to use it properly. What does RSI tell you? When RSI is above 50, it means buyers, bulls, are in control, and when RSI is below 50 it means sellers, bears, are in control. RSI can be used to gauge the market sentiment as well. When it's above 70 there is exuberance in the market, and when it falls below 30 we can say there is fear in the market. RSI can measure the trend momentum strength and potential trend reversal points, and RSI simply measures how traders are bidding on the security. How I like to trade with RSI. When RSI crosses above 30 and 50, usually it's a bullish signal. It means more buyers are stepping in and bulls are getting back the control from bears. When RSI crosses below 70 and 50, usually it's a bearish signal. It means buyer strength has weakened and bears are getting more control over the security. So here back to daily Tesla chart again. Please pay attention to the highlighted red circles. The red circles are the point that RSI generated sell signals when RSI crossed below 70. The right top red circle on the chart, we can see the price of security started to fall. So our sell signals are when RSI crossed below 70 and 50, or when generally RSI slope reversed from an uptrend to downtrend, and when has a negative slope. These points are highlighted on the chart with red circles. Here on the chart our RSI indicator generated two solid buy signals which are highlighted with green circles. The first signal is when RSI crossed above the 50, and if you pay attention to price action we can see the security price started to rise, and the price rose from nearly $770 to almost $1,150. Another buy signal was generated when RSI breakout out from oversold territory and crossed above the 30. It's shown on the chart with a small green circle on the right bottom. Please be aware that RSI is just the tool to help us measure the trend momentum strength and cannot be used solely to identify the trend direction. RSI creates so many false signals as well, that's why it must be used with other technical indicators to confirm the trend. RSI is also mostly a lagging indicator because the price has to move first for the indicator to follow the price. That's why relying only on the RSI is not a good practice, because it lags behind the price and you might miss the big trend by doing that. However, RSI can be the leading indicator as well. When RSI reaches very extreme levels or anomalies we can say the price is overextended and the market overreacted to that security. Please bear in mind that the RSI ranges depend on the trend. For example, during an uptrend, RSI usually stays above the 30 and will frequently hit 70 or above 70, so buying opportunities during a strong uptrend are when RSI goes below 50. Contrary, during a strong downtrend, RSI mostly stays below 70 and hit 30 frequently, and when RSI goes above the 50, it will be considered an overbought zone, correction of a downtrend, and will be considered as selling or shorting opportunity. What is RSI divergence? When a stock price and technical indicator move in different directions, we call it divergence in nature. A bearish divergence occurs when the price goes up, makes a higher high, but RSI goes down, makes a lower high. A bullish divergence occurs when the price goes down, makes a lower low, but RSI goes up, makes a higher low. Divergences can be rare when a stock is in a stable long-term trend. So here, back to Tesla chart again, we can see that RSI bearish divergence formed, highlighted with a green circle, when a price formed a higher high but RSI formed a lower high, highlighted with a big red circle. This can be seen as a selling opportunity or opening a short position. Another strategy that we can use here is, if you notice to RSI level, you can see RSI is at very extreme levels and is above 94, which is anomalies in the RSI range. We can also interpret that the price of a security is overextended and the market is overreacted and potential correction should be on the way. Another takeover from this chart is when RSI crossed above 70, which placed the security technically in the overbought zone. The price of Tesla was around $800 and it rose to almost $1,250, which is more than a 50% gain, so RSI seems to be less accurate in strong trends and should be used with an extra grain of salt and can be misleading in strong trends. RSI pros. RSI is a simple momentum indicator and is easy to understand and very easy to calculate. RSI helps us to measure trend momentum strength and potential reversal points. RSI shows us when the security is overbought, overvalued, and when the security is oversold, undervalued. RSI extreme levels, anomalies, can signal that the price is overextended and may soon reverse in the other direction, before the price reverses. RSI cons and limitations. RSI creates so many false signals, especially during a strong trend. RSI is not an ideal tool for executing and confirming a trade and must be used as a complementary indicator. RSI indicator disregards the volume completely in key reversal points. Even though RSI does a great job in finding overbought and oversold zones, but it can't predict how long the security will remain in that zone and might take longer than what traders are looking for. Thank you for watching. If you find this video useful, please share, like, and subscribe to my channel for more videos. We are going to cover other indicators and trading strategies as well, and we will practice how to properly manage our risk and capital in each trade. Please let me know how you trade with RSI, and if you have any questions, please drop a comment. Happy trading!